Alright, am I live, guys? I have no idea. You let me know in the comment section. I just wanted to make a quick update because I don't know, I felt like it. I guess gold would be at a critical level right now. It's at 1500, and today was very boring in the markets. All right, I'm live. Guess you guys could hear me. All right, first of all, not financial advice. Consult your financial advisor. I am not your financial advisor. This is more about learning about trading, economic news, listening to me ramble, and consult your financial advisor before you do anything, and know the risks involved. Stocks, extremely volatile, extremely risky. If I look at Bitcoin, extremely volatile, extremely risky. So the S&P 500, it had a nice rally Friday. And today, Monday, I was hoping this would happen actually. I was hoping this would sort of be a dead cat bounce. And then it would sell off. Right now, Trump's talking. He's making some sort of trade deal with Japan. And, if you're a libertarian, obviously you would think of it as, well, you don't need deals if there's a free trade and, it's free market. Of course, Trump's trying to bring back industry and trying to lower the trade deficit. Wednesday, the Chinese markets open again for metals. And there's going to be trade talks tomorrow with China and Wednesday. And if those go good, which I don't know how to digest that, because I don't know how the market's going to digest it. So if there's anything, right, if there's any good trade negotiation done, and I mean anything, it might come out as great news. MSM will say, oh, it's great news, blah, blah, blah. And then the market might sell off anyways, because what comes after that, right? Because there's not much to look forward to after that. If it's bad news, the market sells off because it's just bad news. And the economic data overall it's not great. I know the jobs numbers were really good Friday, but like I said, everyone kind of knows those numbers aren't legit, or they're really just part-time jobs being created. So right now, I'm looking at gold. You guys could ask questions. I'll answer them in the comment section. And it's around 1500. It's support is holding up. It is. Here's the thing: if gold starts falling, especially below 1490, then we're probably due for a larger correction down to like 1440, somewhere down there, for the next few weeks. Although I still think metals could rally higher and take out the previous high of this year. But in order for that to happen, a few things have to go right for gold. And that means a few things have to go wrong for Trump and the economy, right? So, for one, the markets would have to sell off for the next few weeks. And October is known to be extremely volatile, and corrections tend to happen around this time. So it's really up in the air right now what's going to happen with metals. This is a daily chart. We're going to have a moving averages cross to the downside. So it's like a mini death cross right there with the 52-day moving average. Although the MACD could cross back up to the upside. Like I said, it's just really tricky right now. So, when you don't know, you're supposed to go in the cash. When you're not, and you should always have a stop in place somewhere, right? Depends how you feel. That's how I trade. I don't stick to one certain rule because every trade is different, and every situation is different. I'm more concerned with letting my winners ride, and then I take you cut your losses short. That's my main strategy, and it's worked out pretty well for me. I mean, silver, it's also holding up around $17.46 right now, right around the 50% retrace. Let's look at the markets overall. And here's the thing. I mean, this is the dynamic that's very it's hard to gauge, because if the blue line is interest rates on the 10-year, the orange is gold, right? Every time the 10-year drops, gold rallies. Every time the 10-year spikes, gold dumps. But whenever the 10-year interest rate spikes, the stock market dumps. And when the stock market dumps, gold also tends to rally. So I don't know how to... like I'm saying, it's very tricky right now. The Russell 2000 smaller to mid-cap companies in the U.S., domestic companies, not internationals like the S&P 500. Those companies are internationals. It had a nice little rally today, surprisingly. Although it's going to come up on resistance soon. And if it gets rejected at 1500 and falls back down, the Russell 2000, the same will happen, I think. This is, for me, whatchamacallit, I forgot the word right now. It's like a barometer for the rest of the markets. Because the NASDAQ and the S&P are more for, the FOMO buyers. And here's the S&P 500. This is a 4-hour chart. Today it sold off right before the close. So that is a sign of weakness, although it is a 4 count, and the 4 and the 5 count do tend to pull back. So I think the market's just waiting to see what happens with the trade deal for the next 2 days. And then when China... And then also I would watch Wednesday when the precious metals markets open for China. They might just buy the dip. But like I said, even if there's a good trade deal, it might be, buy the rumor, sell the fact. And, the more and more they talk about the trade, the less effect it really has on the markets. And the markets are just everyone's just going to turn to TA. If I just turn to TA, besides this channel that the S&P 500 is in, and this is a 4-hour chart, we do have sort of a head and shoulders. I mean, it's not really a head and shoulders because the neckline doesn't... it's not really there. You could barely see that, but you guys could see what I'm doing, right? This is sloppy. You guys can see that. So this is left shoulder. Here's where the neckline breaks, though. This would be the head. And then this would be the right shoulder. And then, plunge protection team came in and they prevented the market from falling much further on the S&P here, below 2,800, and we just had a bounce, right? Now, is this bounce going to turn to a rebound and then the market heads to all-time highs? I don't know. That's what I'm trying to figure out. Right now, I'm just sort of waiting and letting the market tell me what it's going to do. Because if this sells off and revisits the bottom part of this channel, right? So this is the bottom of the channel, up here's the top. And then we sort of have a head and shoulders. Sorta, not really, but it's similar to the pattern. I pay attention to those. I'm not saying there's any certainty of it. I'm just pointing out some obvious things here. And right now I'm just waiting for the market to tell me what it's going to do. And another reason why I'm making this video is to warn you guys, if 1500 area here breaks and then we go below 1490 on gold, I mean, expect a few more weeks of downside, a few more months for this holiday season. And then, don't worry, 2020 metals will be in a raging bull market. But for now, I'm just waiting. Now, of course, if the market falls for the next few days or this week, they're going to talk about more interest rate cuts, which will be positive for metals. So that's another reason why I'm still holding my long position right now. I moved my stop to give me more room. So I'm not locking in profits or anything. I'm just sort of waiting to see what happens. Now, I was looking at some news articles. It's a very boring day for the news as well. Besides Japanese trade deal, I don't think it's that big of a deal, but I mean, it helps the market a little bit. As long as the name of the game is Trump needs to fix the trade deficit for any hopes of the U.S. Being able to survive a very, very bad recession, because that's why he's doing the trade deals, because he has to fix that and the manufacturing base of the U.S. before we go into like the next great global depression. So this article, so let me read this. Before I do that, a few comments on the larger backdrop. Let there be no doubt that this week is shaping out to be a major event week for the stock markets around the globe. It's decision time, trade deal or no trade deal, interim deal, easing of tensions, or another pushback with no specific results. The implications for the markets are profound. And I know that that's true, why this is, a very important time right now. Because MSM, CNBC here, they're very calm and they're very boring too, the news. Like, that's how you know that this is a very important week. And the trade deal, like I said though, even if it's a good trade deal, the market may sell off anyways. Because at the end of the day, the Fed still has to keep lowering interest rates and injecting money into the system to make it go higher and higher. There is a reason markets reacted initially poorly to weak economic data this week. One was, of course, technical, but while U.S. markets have largely ignored the malaise of the global slowdown underway, the weakening data points coming in throughout the year, it's now become clear that the slowdown is increasingly spilling into the U.S. as well, not only in manufacturing, but also now into the service sector. And while markets took comfort in the jobs report on Friday without a trade deal, that comfort will not last long as employment growth is slowing along with everything else. My view remains that markets will soon run out of patience and want to see a specific measurable result. Meaning, not only is the market going to need like a good trade deal, but it's going to need QE4. We're at the longest economic expansion. Money's drying up, and they need to print more to keep the markets going higher. It's a Ponzi scheme. I mean, it's that simple, guys. Also, the economic data. So the psychological sentiment is everyone's kind of worried because economic data has been weakening. And we're going to get earnings coming out for these companies in the next few weeks. And if those earnings are bad, and then there's more bad news economic-wise for the fourth quarter, 2020 is going to be it for a major market correction. And then the gold-silver party is really going to start. Oh, by the way, go to my other YouTube channel, right? Because I need you guys to jump around from one YouTube channel to another, mainly because I'm going live on my larger YouTube channel because I could only go live on my large YouTube channel. I can't go live on my smaller one because I have to set up a bunch of stuff. And then so just go to both channels, that way you will get my videos as soon as they come out. So if you type in MMGinvest, you'll get this channel. But you'll probably get my larger channel as well. So this is my smaller channel, and then if you take the space away between MMG and Invest, you will find my larger channel. And you need to subscribe to both, so because it takes hours to upload videos, and sometimes I only upload it to one channel, then I have to run and do something, and then when I find time, I'll upload it to the other channel. Just giving you guys a heads up. So subscribe to both channels. What else did I want to say? I think I still have the 10% off for my website, and oh man, I just forgot. I had something important. I don't know. Oh yeah, Mike Maloney made a good video. It really made me bullish. I was really excited. It's this video right here. The big silver shock is $150, a no-brainer. This video, I agree with him. I think at least 150 on silver. But 300 is also very reasonable in my opinion in the coming years. I'm not going to say it's going to be there in a month or two. I'm just saying towards the end. If silver goes to $300 or even 150, the silver mining stocks are going to go up like over 1,000% in gains. Some could go up, who knows, 5, 10,000, like who knows. So, saying, there's more upside to silver than gold, obviously. It's also more risky. But, same with gold. I mean, 5,000 is very reasonable in my opinion. So these are the prices I am expecting in the long term, all right? So that's why I think accumulating now and not trading the stocks themselves, just holding long and trading the ETFs is the strategy that I'm doing personally, because I want to accumulate as many shares for the future. It's not the percentage gains I'm worried about right now. Even the losses. I don't care about the percentage gains and losses right now. I just want to accumulate as many shares as possible in these mining stocks, because later they're going to be worth so much more. If you understand the strategy there, right? It's all about accumulating shares. It's not your market share. It's not about the percentage gains right now. I don't care if it falls 50% for a stock. I'll just buy more because I'm accumulating for the longer term. Because right now silver is at $17. If it goes to $150, I mean the share right now that you're holding is going to go up by like 500 to 1,000 in value. So that's how you have to look at it. What else? So listen, guys. Right now, I'm just being patient and I'm waiting for the market to tell me what it's going to do this week. Obviously, have your stops in place in case gold and silver really tank, because it's possible. And then, or at least hedge, right? You could also hedge. The dollar did pull back a little bit. like I said, guys, the dollar is going to keep going higher as China markets sell off and European markets. It's just a very precarious moment. It's kind of like the calm before the storm, or the calm before a very big move in the markets, either to the downside or to the upside for equities, for like the Dow Jones, S&P 500, and all that. And right now, I just don't know. We might get some sideways action until the next Fed meeting at the end of this month, 29th and the 30th. If you look at the dollar for a second, let's take a look at the dollar. Oh, crap. I have a lot of people asking a lot of questions. So the cup and handle worked out. It was a little crooked, but the cup and handle worked out. This pattern's very bullish. Tends to work, you tend to get a nice rally after the handle part, right? And we did in the dollar, as expected. So, right now, the dollar may revisit the 52-day moving average here, around 98.5 handle, and then we'll see if it goes even higher. It all depends on what happens globally. Let's take a look at the global market for today. Actually, we could look at the past month performance. I haven't looked at that. I'm curious. Here's S&P. Today was very mixed. Not much happened. Here's the world for today. China very red prior to the trade deal. Also, if you're China, so if I am, what's his name? President Xi Jinping, whatever. If I was him, what would I do? This is what I like to. This is game theory. If I was him, what would I do? Because I am looking to be the next world superpower, and my stock market and my economy is it's been faltering much more than the U.S. right now. So what would I do with these trade talks? Because in the end, it would be positive for China too if they made some sort of trade deal. But, of course, they're not going to come out winning the trade deal. The U.S. will, because, it doesn't get any better than what China's had with the U.S. regarding trade in the past 10 years. So it's never going to be that great ever again. But will they come to some sort of deal, even for China? Would it be positive? I don't know, because China's long-term game plan is to somehow... They've been buying gold, all right, guys? They want to be the next world reserve currency and the superpower. So if they don't make a deal with the U.S., he knows that Trump's likelihood of getting reelected falls dramatically, because more than likely the market's going to fall as well. So if China is really aggressive and they really want to take the throne for the largest economy in the world and, the most powerful in the next 5 to 10 years, they're going to make moves like that. Let's take a look at the past month performance for the world. Yeah, China's down 5% in the past month. Let's take a look at the performance for the past year. China's actually up. Well, that's Alibaba. I'll look more in depth about this later. I just kind of went live and then, freestyling this video. All right, let's see if you guys have any good questions. Hello, why you are so pessimistic about Bitcoin? Because, the interest in it has fallen overall, and Tether. I think that this entire rise in the past 6 months was price manipulation, and all manipulation ends the same way, and it crashes. Overall sentiment, I mean, it's fallen by like 90% on Twitter everywhere. Not just that, I haven't heard anything about is it scalable and all that. So how does Fed bailouts affect gold and silver? They also will extend the bailout money to the banks. Um, well, it's positive for metals because they're just printing more money, right? I mean, more uncertainty is better for metals because it's a safe haven asset. Politically unstable countries. I know there is a very bad speculation on Bitcoin, but there is speculation also in gold. Okay, I mean, there's speculation everywhere, but gold is being bought by every central bank in the world because they're gonna go back to a hard money uh, world. It's the only thing they can do after they've pretty much used up all of the purchasing power of the fiat system. The fiat system right now is they're extending it as far as they can to create more fake wealth, and it's kind of like you're using it to rob. Governments are as well, and so are banks and corporations. Everyone's using fiat money right now to accumulate as much possible wealth for themselves, and then the world has to go back to a hard money. What do I think about the extension of the repo funding through November 4th? This is probably going to be a long-term thing, the repo thing. It's because there's not enough liquidity in the system. You have to understand, in order for the system to keep growing, you have to inject more and more and more money. It's endless. Soon as momentum is lost and they raise interest rates by a little bit, you're gonna get cracks in the system. Like there isn't liquidity for overnight lending, and banks don't trust each other. They know what's going on. They know what I know. They probably know more, even to a larger extent and degree than I do. Who said give me chart and I tell you the news? What? QE is already here, man. In a way, yeah. I mean, the repo market is, but they do take that money back out. I wouldn't say it's full blown QE just yet, but it's like QE light. Yeah, well, Greg Manorino is a little hyperbolic. He's way too emotional for me. Repo funding is already in the background first. Chinese stock is the way to go since they are down. I don't think not yet. The global recession has to reset, and then I would start looking at Chinese market again and Russian market. But I think that's years away. You might get a bear market in stocks and equities for a long time, guys. The world's never seen anything like this before, so you don't want to jump the gun on anything. No one knows exactly how it's going to play out. You might see a bear market for like 2, 3 decades for all equities all around the world. I mean, of course, there's always a bull market somewhere. Um, but right now, I think it's too early to jump around and, try to time that. Yeah, I just stick to gold and silver for now. It's the safest thing you could do. Because the only thing they can do is prop up the system because they're so scared. I mean, what's going to happen when the system falls apart? Not even they know. Not even. I'm serious. Not even they know. What's your views on the bank runs in Hong Kong? I mean, Hong Kong's being taken over, right? So Will it affect the market? Yeah, I mean Hong Kong's a decent size. Where's Hong Kong here? Let me show you guys. Singapore. Here's Hong Kong. It's down 13% for the year overall. And it's a decent size. And you're gonna see. So Hong Kong can be like the black swan, right? It can be. It was kind of like Malaysia back in the late 1990s that caused that huge firm to go under that Jim Rickards worked for. Um, what was it? Something Capital. I don't know why. I'm forgetting things right now, but it'll come to me as soon as I'm done live streaming. But yeah, I mean Hong Kong could be one domino that starts off more dominoes. But honestly, guys, I mean Europe, Brexit, the dominoes are falling on the peripheries, and then they're just falling inwards, and it's gonna come and end in the U.S. because the U.S. is the strongest as of right now, and that's how this is gonna play out. It's all about human psychology. As long as people think that that the economy is gonna be fine for another year or a few years or 4 years. Right now, MSM or CNBC, they're J.P. Morgan, Goldman, all these people who they interview keep saying, "Oh well, the economy is gonna be fine for some time." Everyone's nervous, but everyone's just saying things are gonna be okay for another year or two. So, but they say that they always say that. Yeah, HSBC is cutting 10,000 jobs. Here's the thing: everyone thinks that the collapse is going to be like in one day or one week. It's already happening. It's been happening. The U.S. industrial base has been falling apart for four decades since like 1970s. It happens slowly, and then one day the equity market, that's the last one to crack. And that's the thing that we're talking about when we say crash. It's just the S&P 500 and the equities market. But overall, it's happening right now. Everything's slow. The real economy is slowly deteriorating. So but I gotta go. I have something. I have to go pick something up. So I don't really see any more questions. Deutsche Bank already went under, guys. It's been bailed out, and it's had a merger. It's already gone under. Guys, things have been falling apart now for years. It's just the matter of when is the equity market going to crack finally. That's why Trump keeps tweeting about equity markets and trying to get the Fed to keep stocks artificially high and going higher because it's the last thing to go. Because once people look at their retirement and it's falling in a big way, they cut spending, they stop spending. It's a consumption-based economy, and then everything accelerates to the downside. All right. Smash some likes, leave anything in the comment section. I will respond to them and share my videos. It's the only way my channel grows. And subscribe to both of my YouTube channels. You need to do that because I'm probably not going to post this video to the other channel till later tonight or tomorrow morning or something. And then go to my website, 10% off. Till next time.